Looking at the Markets with David Modell.
Welcome to Looking at the Markets with David Modell. I've got a return guest, a frequent guest. He is Mr. Seth Golden, and he is in charge of the Golden Capital portfolio, which has had amazing returns due to a number of strategies that he employs, both with VIX-related products as well as the retail sector, which he is an expert in. So today we're going to talk about, well, put it this way, Fitbit, Apple, Samsung, they're all getting into the smartwatch space. Who's the winner, who's the loser, and if you're thinking about investing, how do you handle all this? If you should do anything at all. We're going to talk about all that today. So, Mr. Seth Golden, welcome back to Looking at the Markets.
Thank you very much, David. Glad to be back, and hopefully we can, give some good information to your listeners, and like you said, anybody who may be considering an investment in the smartwatch arena.
Yeah, and it is an arena. It's a battle. In fact, in yesterday's article that you released on talkmarkets.com, because you are a frequent contributor to seekingalpha.com, talkmarkets.com, I'm going to put a link in the description to that article. And people should check out Seth Golden not only on seekingalpha.com, talkmarkets.com. He is Seth CL on Twitter. He is Seth Marcus on StockTwits.com. He's a frequent tweeter, so check out his free content if you get a chance, all right? But yesterday you put out an article on Talk Markets called It's Official, The True Battle of the Smartwatches Has Begun. This sounds serious, and it's a three-way battle, okay? That was your lead-in, and then the actual title of the article is Fitbit, Apple, and Samsung Go Head-to-Head with Smartwatches. So far we've got the Apple Watch Series 3/LTE, and you listed that as $329 to $399.
Right.
The Fitbit Ionic, $299, so clearly less expensive. That's a $100 discount compared to the Apple product. And then the Samsung Gear Sport, $349, about the same price as the Apple. So, where do I even begin with this? Apple seems like it's going to be the clear winner because it's Apple. Is that reasonable thinking?
It's reasonable, yes. I mean, they have the brand. They definitely have the capital to, push products into the market. And thirdly, probably most importantly, they have the retail distribution network and distributor relationships around the world. So it is a reasonable assumption that Apple should do well. Whether or not they'll be the leader in the category long term, that remains to be seen. It will be product centric. The product itself will determine the outcome long term. But in the interim, Apple should do very well. And it's not just this product. It's their suite of the whole suite of smartwatches. This is their third iteration. So they have the Apple Watch Series 1, 2, and now 3. They come in various two sizes, as well as colors and things of that nature. And they even have a partnership tie-in with Nike for a Nike-specific co-branded Apple Watch. That was last year. So this year, what they decided to do was they have two iterations. One is their basic model, which will sell for $329. They've upgraded the features, added some new features to it. But the most, compelling feature, if you will, is going to be on the more expensive model, which is the Apple Watch Series 3 that has embedded LTE connectivity. So now you can actually take calls and place calls from your Apple Watch without your iPhone being present. So if you wanted to get in your car and drive somewhere, you no longer have to have your iPhone with you. One of the misconceptions about this new Apple Watch with LTE is that that's your device. That's it. That's unfortunately not true. you still have to have a primary iPhone. That is your original OS, your iOS system, for which when you initially connect your Apple Watch has to be present. So you will always have to, well, to date, you will have to own an iPhone as well as an iWatch for the iWatch to work, regardless of which iteration it is. So, and there's been some issues with, that have been in the news regarding the LTE not connecting properly. Apple has, announced a software update that is pending that should remedy that issue, but again, it remains to be seen. So, long story short, Apple should do well, if not for just the sheer number of products in the category that they have now. I mean, it's 6-7 watches. So just selling it into the market should, boost their numbers year over year for smartwatch shipments. So now the Fitbit, so I've tested them all. I've done beta testing with some of them as well. What I can say is these products they will appeal to a certain demographic consumer. And that is the consumer that is, most concerned or more affiliated with their health, fitness, eating habits, things of that nature. It's not to say that other people, can't find use for them, but that's the biggest consumer demographic that's going to buy these products. So when I compare the Fitbit Ionic, which basically launched in stores yesterday, to the Apple Watch Series 3, I believe that the Ionic is more focused to what those consumers want. It's more health and fitness related. It has stronger applications dedicated toward workout regimens. It has self-guided regimens on their programs. But some of the things that the Fitbit has added, because this is their first true smartwatch that has third-party apps. Okay. The Fitbit Blaze that came out last year didn't support third-party apps, so it never actually was categorized as a smartwatch, even though it looked, felt, and did most of the things that a watch does. But because it didn't have GPS, couldn't download music and things of that nature, it was never in that category. The Ionic smartwatch has all of those things. It now does have GPS. You can download up to 300 songs, and it has the Pandora app in it as well. So it can do almost everything that the Apple Watch can do, only at, like you said, a less expensive price, more health and fitness oriented. It's water resistant up to 50 meters like the Apple Watch. I mean, it really has everything that the Apple Watch has, for the most part, except, and I very much, inform people of this, the App Store it's not bountiful. There's only a few apps in there. You're not going to get the whole suite of apps that you get with a iWatch. It's just not going to happen. Having said that, let's be realistic. Our phones carry the bulk of our apps that we download.
Sure. It's
got a bigger screen. That's where you can use most of those apps. You want to download a game? I mean, the screen on your watch just isn't going to do it. Neither is the dexterity. I mean, how can I play with one hand and holding up my wrist? Do I have the strength in this arm to hold it up while I play? It just doesn't work.
Right.
We want to take photos and things like that. You can't do it from your watch. You can't see the screen from behind like this.
Right. So
most of the apps that we use, they're always going to be on our phone just because we have more dexterity. It's kind of a human physiology issue. Sure. You can only do so much with that size screen located where it is on your wrist. Sure. So, where a lot of people might say that, the Fitbit App Store just can't compare to the Apple Watch App Store, they're right. Does it matter, though? You're really going to be using all those apps, and most people won't. The majority of the apps that are used on the Apple Watch today are music related.
Hmm.
Now they both can do music, or they're GPS. You want to track your run, you want to know your distance, things of that nature. Those are the two primary functions used on the Apple Watch so far as the apps are concerned, and that's all now on your Fitbit Ionic. One thing that the Fitbit Ionic has that the Apple Watch doesn't is a sleep tracking. You can track your sleep, all night, and now, while that may not be, that important to most people, and in fact it isn't, most people, they track their sleep for a little while and then they just stop because it's not fixing your problem. It tells you have a problem or you don't have a problem. It can't fix your problem regarding sleep.
Right.
But Apple doesn't have a sleep tracker. So where, we may say, well, the App Store has all of these apps and Fitbit doesn't have all these apps, but it has a sleep tracker. So what? You're not likely going to use that very long. So they both have their gives and takes, if you will.
Sure.
But just based on what I outlined right now, you can see that they both have a lot of good value to the consumer. It's just a matter of really what's your preference. When you look at both devices, the Apple Watch has a smaller screen. May not like that. It has rich, vibrant colors. So does the Fitbit, but it has a larger screen. Now, the one thing that I did really like about the Fitbit Ionic that they recently announced, and I just started, get to play with, if you will, is the community section. This could be a game. I don't want to say game changer because I don't think there's any true game-changing app in any of these devices. But it could be a game differentiator. Facebook, people check into Facebook religiously, 3-4 times a day, and they spend a lot of time on Facebook. Twitter, same thing. They check in periodically, they spend time on Twitter. Fitbook has developed the community section within their app, and it works very similar to Facebook or Twitter, where you can check in to see what your friends are doing, see what posts are being put on there. Maybe somebody has a low carb meal before a workout. Johnny just ran a 5K in under an hour or what have you. You can check out all those things daily. And the reason why I say it's a game differentiator, because it does provide feedback and interaction, and that's why we tend to walk around like this, staring at our phones for a majority of the day, or taking it out of our pocket, checking it. There's a reward. At some point during the day, we know if we look at it long enough, somebody will have sent us a text message.
Right.
We'll get an email. We'll get a Facebook alert. And that's what Fitbit did with the community section app within an app, is they're trying to make it stickier, the device stickier, by making it more engaging and enabling the Fitbit community at large to interact with one another, set up larger networks, set up small defined networks, maybe just their friends, groups of people, etc. Nobody else has that right now. Apple doesn't have that. They don't offer you that. Even Apple doesn't offer that. Samsung with the Gear doesn't offer that. You name the device, the Fossils, the Michael Kors, none of them have that. So this was Fitbit really stepping out, of their core competency and really doing it kind of sneakily. They made no mention of this over the last 3, 6, 9 months. No mention of it whatsoever. There's always been a community type, interaction, but you had to go to Facebook to do that with Fitbit, to interact with other people. You don't have to do that anymore. So they officially announced it just a few days ago. So I'm interested in seeing, what develops from this, how stickier of an ecosystem this could possibly become. And I don't think nobody's really talking about it. And, I think there's something to glean from that going forward.
Yeah. Interesting. Now, I wanted to just touch upon Samsung briefly, if you don't mind.
Sure.
I thought it was interesting that they're offering a smartwatch at around the same price as the Apple product.
Right.
Can they be competitive in this space against Fitbit with their niche, targeted,
Right.
their target audience? They're really going after the fitness crowd, and then Apple has the brand name recognition that you really can't compete with too easily. So, what about Samsung? Are they a competitor here?
Excuse me. Yeah, they're a competitor, but and it's sad to say because they actually they were the biggest brand when they launched in 2013, going into 2014. They were the biggest brand. They kind of pioneered with the first Gear smartwatch. However, it had a poor reception out of the gate. You can almost say that blazing the trail was not a good idea because it kind of diminished the brand or the product image for future iterations to come. But at this, so I would say at this stage, unfortunately, not only does it seem like they're satisfied with only shipping maybe 500 to 1 million units a quarter, that's all they've been able to do. In the last quarter, they shipped under 1 million units. Yeah. Apple has been said to ship anywhere from 2.8 million to 3.4 million, just depending on the reporting agency. Everything in their new in the new Gear Sport smartwatch is very. It's really defined to an even more niche consumer demographic. Some of the features are really intelligent and really smart, oriented around swimming, but that's just such a narrow market to go after. Yeah. They don't do anything with community. There's not a lot of interaction. So I would say they're not going to be competitive so far as being in the top 3. I don't think they'll be able to be in the top 3 going forward. Top 5, yeah, maybe. Just depends on how quickly the likes of a Fossil starts to, denigrate its numbers. But top 3 is going to be really hard because you got, Xiaomi, Fitbit, and Apple really spiriting the smart technology and just what the consumer wants.
Interesting. Being a trailblazer is not always it has benefits, but in this case,
risk reward
didn't turn out so great. Sometimes it's better to be second or third.
Yeah.
Very
Apple knows a good thing about that.
Yeah. Okay, well, now let's talk about the investing aspect of it, because that's what people want to know. They want to get to the bottom line. How do they play this? For example, right. Can we say Fitbit has tested the patience of people who've invested since the IPO? Would that be fair to say?
Yeah, they definitely tested I think the stock was in the 50s at one point, and it's now $5, $6, $7 a share. So, and that's all happened in less than 2 years.
Yeah.
So yeah, they've done a good deal of disappointing the investment community. What I can say is, I would offer that investors and listeners should read my early works. January 4th of 2016, the stock was around $30 plus dollars. And I took my first crack at, analyzing the company, looking at its, S1 and everything of that nature. And I was trying to discern whether or not the company was different than other, hardware, one-trick pony-centric companies. Unfortunately, at that time, I, discovered it wasn't. This was truly just a, story of selling this product into as many countries, as many retailers as possible, and as quickly as possible. It's the way all of these stories work. It's the way it went with SodaStream. It's the way it went with Keurig Green Mountain. It's the way it went with Skull Candy. They all work the same way. So I penned the article, which can be found on Seeking Alpha. It was January 4, and it published in the pre-market, and the stock went down a good almost 10% during the course of the day after the article came out. It was basically a warning. Maybe not even so much a warning, but I thought it was an educational piece. that informed investors how this business model works. And if you choose to invest at that time, this is what you can expect. And unfortunately, that is what happened. It saturated all the, sales channels around the world, and then you're left with true demand.
Yeah.
And unfortunately, true demand, which is the retailer selling to the consumer, is always much, much slower than Fitbit selling case packs into the retailer. So once that happens, you have year-over-year declines, and that's where Fitbit, came into 2017 with year-over-year declines. There was just, they had to level set their inventories, their sales, the inventory and the sales channels was just too bloated. So all the retailers had to work off that inventory little by little throughout the year. And of course, Fitbit couldn't sell, too much more product into those retailers,
Okay.
which, makes their numbers come way, way down.
Yeah.
But you do reach a bottom or an equilibrium of selling in product and selling through product. You do eventually reach that equilibrium. And that's to a great degree what Fitbit outlined on their Q2 earnings call. They had basically reached an equilibrium where the sales channels were clean. Those were the exact words from the CEO, James Park. The sales channels are clean, meaning that they feel confident with what their production levels are and what the demand is that they're seeing out of the retailers. That's a huge signal for investors, in my opinion, and what I've experienced over the years with these business models. It's a huge signal. So what I would say is from here, and based on if you go and read the Q2 earnings transcript, you'll probably come away with the understanding that Fitbit does now, the management team is a really good grasp on the demand. They've streamlined operations, and as long as this economy stays on stable footing, through the end of the year, they should emerge in 2018 with profits. They're expecting a loss this year. They did raise the lower end of sales guidance. They raised it up a little, so they are more confident with sales. In Q2, a couple of things, if you want to look at metrics, that may also indicate, a resurgence, if you will. Their ASP, average selling price, went up both quarter over quarter and year over year. Okay. Their gross margins also went up year over year, and quarter to quarter. So those are all really good signs, and all of that happened without this new smartwatch, the Fitbit Ionic. Okay. All of that happened without the Fitbit Ionic. So there's been a lot of, the Fitbit Ionic smartwatch is going to be the make or break for Fitbit. They seem to be doing okay without it. So the reality or the logic is now you add this to the mix at a much higher price point than this is $100 more than the Blaze. What do you think that's going to do to the average selling price? Mm-hmm. It's going to go up.
Sure.
So you've got a lot of factors at play here that lean positively toward the stock price appreciating into 2018. How much, I couldn't tell you for sure. And I would say I'm not the only one with this takeaway. So you have to take that into consideration. Maybe the expectations have risen, even if off of such a low base, the expectations have risen a bit because the stock is up pretty significantly in the last 30 days. So.
Correct. Yeah. And low expectations are not always a bad thing.
Yeah.
At this point, if Fitbit shows real progress, real growth, I think that could be a really pleasant surprise. Even given the significant stock price rise in the last month, it still has a big gap to fill, and that's an upwards gap. So yeah, could be for the patient and for those with an understanding of realistic expectations. Are we saying that this could be a good play for somebody with a longer term outlook?
Yes, I mean, if I was given a 12-month horizon, I do expect this stock to, if I was going to use a baseline of 550 a share, I think the stock could see a 75% appreciation.
Wow.
You know, one thing that people don't fully appreciate from where the stock is valued right now, it's only a couple dollars over book value, number one. It's trading at a lesser valuation than its peer GoPro. Same business model, and it's trading at a lesser valuation. Here's the differentiator between GoPro and Fitbit. From its inception, Fitbit has sold twice as many units, devices, twice as many as GoPro. Who do you think should have the better valuation? And it's hard to, I mean, it just tells you where the larger addressable market of consumers is. Yeah. And that's where Fitbit is. GoPro has sold, you know, almost slightly over half of what Fitbit has in terms of units. Fitbit has the right product, just doesn't have the right valuation. And that, I would say, needs to correct.
And that's something we take advantage of as investors, especially with a longer term outlook, because as Warren Buffett, I'm paraphrasing here, in the short term the stock market is a voting machine, but in the long term it is a weighing machine, as Mr. Buffett, he said well something said. Like that. And so when the valuation does not match what the company is actually worth, when you measure all these metrics, such as are they selling the product, which it seems that Fitbit is in fact doing, we can take advantage of that as investors. And finally, Apple. I mean, we can't, even if we believe that the Apple smartwatch is going to sell quite well, we can't buy Apple stock just as a smartwatch play, can we?
No, Apple's not selling it, you know, to boost its, you know, its relevancy as a brand. Apple's about, you know, I mean, it wants to be where you are at all hours of the day. Why? Because its greatest, you know, margin product is the app. It's the app.
Yeah.
I mean, that's where all the margins are. So it doesn't care that it's not making as much money with a smartwatch. And I think the company's has been disingenuous with how they report sales of their smartwatch, how they color the gross margin or the gross profit margins on it. Fitbit's CEO was very clear. Smartwatches have less profit margin than their fitness tracker. You're trying to pack all of this technology in such a small device. It's extremely difficult to not only miniaturize the tooling, but everything that you need to go inside there. So they were very honest about that. But no, I would say, you know, the Apple Watch is somewhat of a second thought, but it's a great way of, in case you don't have the ability to have your smartphone on you, to download at whatever, you know, particular, if you're surfing, because you see, you know, the girl surfing in the commercial. Well, shucks, she's not going to have her phone out there, but if we can put something on her wrist on the off chance that she needs to download something, that's what we're going to do.
Yeah. Because
there's so much margin in those apps. So from that standpoint, the smartwatch will help to boost, you know, their services, because the apps are in the services revenues. But as an investment, look, nobody is hearing a lot of great things from the iPhone 8 launch and the expected 10. And I wrote a really long-winded article last year for Seeking Alpha. It was called A Deep Dive into iPhone 8 Curved Glass. And it talked a lot about curved glass and OLED. They are the most fragile components of smartphones if a manufacturer chooses to use OLED. Nearly 50% on a good production cycle, sheets of glass will have to be discarded. The thermal heating process is a really cumbersome process, and you can't set up your supply lines efficiently if you're using that material, because you don't know how many units you're going to get out of this batch. You just don't know. So I kind of warned investors last year of this potential problem, and here we are. It's a problem. The iPhone X won't be launched now, they're saying, until this month, late October. The iPhone 8, some people are posting battery issues or it's cracking through the screen or something. And others are saying, on a positive note, they're saying, no, the sales are slow because they're waiting for the 10. The truth is we won't know until we know.
Sure.
I'm going to buy the 10. Yeah, I mean, I want it. It's got the facial recognition. It's got this, that. Yeah, I want it. It's $1,000. I get it. That's my cross to bear. It is what it is.
Right.
But I am waiting for that 10. I can't speak for everybody. And that's, to some degree why the stock has been punished over the last few weeks. It's gone from $162 down to today. Well, it dipped below 150 recently. Yeah. There's a good trading opportunity in there for, investors were nimble. But I would say, from here, it's probably going to stabilize in share price, and we won't see any significant moves until we see, when the 10 comes out and just how the consumer responds. Were they really waiting for the 10 and just, not buying as much 8s, or they're not buying either? I mean, there is a part of the population, even the iPhone-centric population that says, my phone's working just fine. Do I need infrared, facial recognition technology for an extra $200? Probably not. I guess the good and bad of the Apple brand is they make a darn good product. You do not have to upgrade. I've had my phone for 3 years now. There is nothing wrong with it. I don't have to upgrade. So it comes down to, do you want to?
Right.
So you're taking a risk. Here at the one below 155, I say the stock's in no man's land. If you're an investor looking to deploy capital, you want one of two things: either to follow a breakout or to get in on a breakdown where there's value. In the middle, it's you're just rolling dice.
Right. In
my opinion.
Could go either way. It's not really tradable or investable right now, and I feel the same way. Gotcha. All right. So we've been talking with Seth Golden about Fitbit, Apple, and Samsung in regard to the smart watches, and not only your opinion on the smartwatches themselves, but how to possibly view an investment position in them, or lack thereof. Speaking of investing, if you want to contact Seth Golden, if you have a sizable account and you'd like to invest with him, you can contact him by email at seth.golden@coolinxit.com. I'm going to put that right on the screen so we can all spell it correctly so you can reach him. It's also in the description of the video. Also check out his articles on talkmarkets.com, seekingalpha.com. I'm going to put a link in the description to Fitbit, Apple, and Samsung go head-to-head with smartwatches, his latest article from yesterday. But check out all of his articles. Also go to Twitter, and the handle is SethCL. Also go to StockTwits.com. The handle for Seth Golden is Seth Marcus. All right. And by the way, how's that Golden Capital portfolio doing?
172%.
This year, 172%
Yep.
returns.
And most of if you follow me on Twitter or on StockTwits, what I try to do for the general public, free of charge, is post a lot of my trades in real time right there on Twitter or on StockTwits. So you can my followers and anybody can follow along. I get a lot of skeptics. I get a lot of inquiries, and that's all well and good.
Sure.
I'm a skeptic myself. When I hear of such returns and whatnot. But be skeptical.
Yeah.
But not to the extent where you're a detriment to yourself and you don't follow some of those trades that I put out there.
Yeah. I've actually set it up so that I just did this a few days ago, so that I I set up my Twitter account so that whenever you tweet, I get a text message.
Okay.
So, and I have not done that with anybody else. So there you go.
I do a lot of pre-market and after-hours trading, and I think more recently in the after-hours last week, UVXY, which is a VIX leveraged ETP, it's one of my favorite products to short, and it was at an all-time low. And a lot of people say, oh, you don't short this at an all-time low. Well, I looked at some of the other variables, including the boredom that I have had with the market as of late, and this just grinding upward pressure in the major averages. And I said, well, it is still trending down. Contango's still really in great shape. Let me take a flyer here. And at the very worst, with a very small, day trade basically is what I was doing. The very worst, I've signaled a bottom if it should go against me. I'll be if I have to fall on the sword, I'll fall on the sword for everybody else who has wanted a pullback in the markets,
sure.
And some increased level of volatility to participate with. But fortunately, it was a good trade. I shorted it. It kept going down, and I hope everybody else benefited from it as well.
Yeah, well, we're all benefiting from the free services you provide. You're not getting paid to do this. You're not getting paid to put out those articles and those tweets. You just do it because you want to, and because you want to give back in some way. And I certainly appreciate it. So once again, if you have an account and it's a fairly sizable account and you'd like to look into the returns and possibly participate with the Golden Capital portfolio, by all means, email Seth Golden at seth.golden@coolingsit.com. Or if you just have a question for him, I know that Seth is very personable, and he's not just about getting people involved in the portfolio. He helps the community as well, and I think that's really great. So, Mr. Seth Golden, thank you for coming back. I enjoy having you as
Dave.
Yeah, I enjoy having you as a frequent guest, and can't wait to see what's next. So thank you again for coming on to looking at the markets.
Have a great day, everyone.
Thank you for watching. Please like, comment, and subscribe. And I'll see you next time.